Good morning, everyone. Welcome to the Stock Market Morning Prep video for Monday, June 29th. A lot of things are going on in the markets. Greece on its path of defaulting. Markets opened up 6 o'clock Eastern. The futures opened down about 38 handles. Dow futures were down about 270 points, I believe, maybe a little bit less than that. We did get a little bit of recovery, we did get a little bit of a bounce, but I've been mentioning all week, I said, use caution here, guys. My last video, I put it on a title bar. Use caution. It doesn't matter. It's funny how news finds its way to kind of go in line with what the charts are saying. It's pretty amazing stuff. Doing this 28 years, you could see it kind of starts to complement of what the charts are telling us. And, the charts were a precursor of we are going to get some volatility, Now, I labeled last week that we are coming into 3 weeks of some strength in the middle of the summer. June 27th to July 17th, markets are about 1.27% over the last 20 years. Those are pretty good statistics. That comes from the Traders Almanac. You might want to take a look at that yourself. However, obviously news trumps the charts. Is this still a precursor of what's to come, or maybe getting a decent bounce? Now, banks and the stock markets close in Greece until July 7th, which is, I believe, next Monday, 4th, 5th. Yeah, probably Monday or Tuesday. Now, that does line up coming into some weakness maybe this week, and then we get a little bit of a rally. But I think that rally is going to be subdued, and that's going to be some sort of a local top. I mentioned this last week as well. Then we get a little bit of a sell-off, and then we kind of drift sideways to up. To get back where we are after this sell-off, after this little high that I'm anticipating in July, and then really correct September, October, and I do see a decent-sized correction in the cards here. Without getting through 2015, I would suspect that we get some sort of a correction, and September, October seems to be likelihood. Now, this little bounce that I'm looking for July. The middle of July. Again, this is based on the Traders Almanac statistics. Now, that does not have to happen. We could just correct now, or what I'm saying is at least get a decent pullback now, and then drift higher going into September, and then have that correction phase that we're looking for. Even with the Greek thing here, there's a lot of news politically, what's going on between all of these parties, ECB, Greece, United States. I mean, there's a lot of stuff going on. So what's going to happen is obviously news, again, is going to trump the charts. But I do see, that I don't see us going, really panicking, at least at the moment. Now, today is only one day. Markets even haven't opened up yet. But and I mentioned a couple things about China. China, it's funny, Shanghai is in correction territory. Transportation's correction territory. I mentioned that again last week in the videos as well. And nobody's paying attention. Well, I do believe that a lot of these fund managers are selling into strength. Any pop in the markets they're selling into, because you could see the sell programs come in and hit the tape. Now, that's why I said you really want to use caution here. So if this little pullback that we get could go into a full-fledged correction. I mean, that is possible. Do I think that's going to happen? I don't think yet. I'm not sure, but time will tell. Let's see what happens today, and let's see how much we recover in today's gap down. Now, usually in the futures, we gap, and then it usually fills the gap. After when we do fill the gap, whether it be today, tomorrow, or Wednesday, I like to see where the market goes from there. If it fills the gap and then just continues lower, then it looks like we might be getting into a pretty decent-sized pullback. But again, won't know that until price action tells us. Just quickly, I want to point out a couple of big resistance and support areas. Here's the S&P cash, the SPX. You can see that here. 2135, 2070 is a big area. Please keep an eye on that. If we close below and hold a couple days on a closing basis below that, then we're going to flush to the next local low, which would be 2039, 2040, call it, and then this little area here, 1988. And then, of course, the round lot number of 2000. It's always an actionable area. Okay, but let's get to the 2070 first, okay? Let's run through the indexes. Like I said, we're going to gap lower. These are going to be non-existent. Spiders, we're probably going to hit this area here at 206 and change. Everything is trading much, much lower. Again, recovered from the highs. 207.81 we're trading right now, so we're just about right about here. So we're at this little area here. We have broken this lower trend line support for the last few months. So let's see if we tag this 200 in the next couple of days. But again, a big gap up. We're looking for a follow through. So, you know, you can't judge that we're going into a correction or a pullback on one day. We need to see how the markets react today and tomorrow. That's going to be really, really important. Okay. Now let's take a look at diamonds, which is Dow Jones ETF. Again, we're right down here already. So we're tagging the 200 already in a pre-market. So we need to see how this holds. Remember, guys, look at all of the averages. The 200-day moving average is really, really key, and it needs to hold. Now, again, this is what I've been saying for months. You know, at least here, I said we're sideways. But when we broke lower and then we started making lower lows and lower highs, we had bearish symmetry, right? And we have a series of lower lows and lower highs where every pop is being sold into. This is not good. Regardless of what crude oil is doing, this is not good. Okay, rails are getting crushed, and of course the airlines have gotten hit lately. This next target is going to be this area here. If this does not recover, this is not a good sign. China crashing down over 7.2% last night. We're in a 20%. Lost 20% of its value since 2015. That is huge, guys. You cannot just kind of sweep it under the rug, if you will. This is important. So for those of you who are swing traders or longer-term investors, you need to either react to your portfolio, hedge your portfolio, or reduce any long exposure if you're not looking to hold on to this. And if you are, you know, then you have the stomach to do it, so be it. But just want to let you guys know and be prepared of what I am seeing here, okay? Let's take a look at the IWMs. Now, obviously, the Russell 2000 is the ETF, has been the leader of the five, but now we need to see if the Russell starts getting sold into, because when you see risk happens really quick. And remember, I mentioned a few weeks back, the Russell topped in 2005, sold off 5 months, topped 5 months prior to the 2000 crash. And in 2009, 3 months prior, before it started making lower lows and lower highs before the market did. This needs to be paying attention quickly, okay? Keep an eye on that. Okay, lastly is the Qs. Again, we're going to break below this lower trend line area. The 200-day will be the next target. One other thing I want you to keep an eye on is the VIX, okay, the VIX. We've been basing for several months around the 12 area, okay, long-term base. When we start to base, it's just inevitable we're going to create some volatility, okay? Keep an eye on the VIX. If the VIX starts to break out and we start breaking out pretty hard, we'll eventually get a signal set up for the VIX, meaning that we'll get eventually a buy signal for equities, and that I will show you along with some indicators. Have a great day. Be safe, guys. If you're not good with the volatility, step aside and let the volatility subside a little before you new guys get in, okay? Have a great day. We'll speak to you tomorrow. Take care.